First, I want to get to Cheng, who had talked about China's move in terms of the value chain and the production that it needs to have to make it higher value products, and how all these reforms might actually succeed.
Big but not strong? Fat on resources but slim on returns? Just some of the criticisms levelled at China's state sector, made up of 155,000 state-owned companies. With SOE returns on assets at about half those of their non-state peers, reform is badly needed. Here on Beijing's Qiaomen Boulevard, also known as SOE Street, are some of China's biggest SOE names, ranging from agriculture, telecom to energy. Will reforms make them more competitive? That depends on execution. Resistance from vested interests is likely to be strong. The fundamental shift from managing state-owned companies to state-owned capital is not going to be easy. And coordination among the ministries that overlook SOEs will be crucial.
The government want to deal with SOE problems differently for SOEs in different industries. Those in competitive industries hopefully would be exposed more to market competition, but some industries in strategic industries and so on will continue to receive government subsidy or government support.
For public goods and services SOEs, like China State Grain, the focus will be on cost control, efficiency and service quality. Huang says whether the reforms can weed out underperformers is critical.
My main concern, I think the issue I always keep in mind is if a company becomes for instance, non-profitable, whether or not that company can exit from the market or can be closed, shut down.
For investors, the reform plan outlines opportunities. More restructuring among SOEs is on the cards. The future SOE may look a lot different.
This is what I call A and C type of company. Family business A, C SOE. Some in the middle, what I call a B type of company. Look at IBM, look at GE, look at Siemens. Those B type of companies so essential for the rise of any major power. Look at the case of Japan, Germany, UK, US. So the B type of companies are essential even. And so we don't have many B type of companies in China.
At a micro level, remuneration will become more market-based. Employee stock incentives will be explored. Market-based pay will be adopted to attract more executives from the private sector. To shake things up in the boardroom, the guidelines state that outside directors would make up the majority of the board. Better governance should help companies in their globalization.
When you compete in China, for some sectors, you don't need a sophisticated managerial infrastructure. You have a good relation with government. You are successful for some sectors in the past.
The broad reform guidelines come at a time when state firms' profits are falling and the economy needs extra impetus. More details are due out within 2 months. China's 37-year journey of reforming its state sector enters its most complex and challenging leg yet. Cheng for CCTV News.